Good evening, all. Ira Epstein of Linn and Associates with your metals market wrap-up for this Wednesday, September 30th, 2020, and the time right now about 6:20 p.m. Central Time. A lot of good news came out today, and the metal markets had to react to it every which way, and that has been the difficult part for these metal markets. Which way do they go? At the end of the day, it appears that the House of Representatives is going to delay their vote they were supposed to have tonight on their version of a COVID relief bill, as Secretary Mnuchin and House Speaker Pelosi have gotten close enough where they're trying to work through the final parts. It appears that the size of the deal, they're still far apart on. It appears they're still far apart on the second issue being relief for states and municipalities, and third, the insurance provisions that COVID-19 is not a case where you can sue on corporations that the Republicans won. I've just labeled it very simply for you, and I'm sure there are better ways to explain it in depth, but those seems to be the three areas. Now, there should be some give and take where they maybe can get those done, and you might be as surprised as I am if you wake up in the morning and these markets are sharply higher if the makings of a deal are there. That becomes the question. The market's built in a certain amount of that. No deal, and if you think the Disney 28,000 layoffs were something, wait till you see what you're going to get out of the airlines. They'll come at you right away. That could be as early as tomorrow. Massive amounts of layoffs. The shale industry, you're seeing it. There's a lot going on. But what we care about is what's going on in the currencies. The dollar weaker, number of currencies stronger. Copper proved that it's metal, coming back, if you will, from those low 290s back up into this 303 area. But let's go to the charts because they tell the story. Now remember, your weekly charts are still running as they are right now. And that's because we didn't end the week. We ended a month and a quarter. So on the weekly chart, here we are up 1.5% for the week. We went down to that support zone and so far held it very nicely. When we go to a bar chart, you can see how you work down into these levels and you fell back into the support of this whole zone that I was talking about. Now the question is, what next? In terms of the swing line study, which takes a look at the previous bar and measures a line either to the top or the bottom of that bar, it's got a pattern set with higher lows and higher highs. That's bullish. I put on moving averages. Here's the 18-day and here's the 100-day. The market had fallen to the 100-day. I think the longer-term gold traders, people that believe that the next big play is going to be in the commodity sector, I happen to be one of them, by the way. I think they began their buying right in this area. Resistance comes in at the 1923.70 level. While the swing line is up, the bias is down since you're under the 18-day average. The market did a job of holding the combination of the 100-day average and the Bollinger Band. So what? What happens is while the swing line's up, the bias is down, and if you look at momentum, the momentum hasn't yet really turned up. It's still in oversold territory. So you're still stuck waiting to see what's going to be the next step. When we take a look at the gold-silver ratio, silver often in October gains on gold. So it's something that I'll be looking at from a seasonal basis. When we come to the next part, on the silver chart, you're still very much in a downtrend. You have to get up and over that high in order to negate it. Again, the market went to the 100-day average, and I think those that trade on weekly charts and the like, they were probably buying the market for the longer term there. Those type of traders don't care about this daily action. They care about how silver's doing overall, but how their risk factors a lot bigger, their scope's a lot longer in the market. They might be in the D's now, and when they roll, they'll probably roll out maybe as much as 3 to 6 months in the future. You don't know. They'll pay that time element, of course, because that's how the contracts work. They look at it, but interest rates are so low that time element's inexpensive right now. So we're still in a downtrend. You've got to take out 2454.5 to negate the downtrend, and that doesn't start an uptrend. In copper, you have a market that's got higher lows, higher highs. All it did is rally back to that 18-day average. I have been consistent in telling you, Bollinger top to bottom, you're probably going nowhere and getting back to that 18-day average right in line with what I'm talking about. Then we get to the platinum market, which negated its downtrend. It now has a pattern of higher lows and a higher high. Now you get into trouble on this chart if you take out today's low of 873.5, and you can see that the battleground's the 100-day average up to the 18. Momentum in the chart turned up, but it's not pointing sharply higher, and bias remains down. You ended the downtrend, but I don't know if you've begun the uptrend in earnest. If you do, you've got to close over the 18-day average at 914.40. In the palladium market, we've been in an uptrend. You have the higher lows, the higher highs, the supports right here where I pointed out yesterday to you, this 18-day average. The number you don't want to get under is 21.9790, and the upside target, if the market can hold on, is up here at 24.2470. Momentum still pointing up. This is still a bullish looking chart. And the dollar index, not surprised at all. I pointed out to you just yesterday, you lost the embedded reading. When that occurs often, that means unless it gains it back immediately the next day, which would have been today, price in the 18-day average are going to make a sharp run at each other. That seems to be what's going on literally as I'm talking to you. You know, I'm showing you right here on this chart my coffee cup because this is what I do in the morning. I second guess myself like everybody else. Guess which market I've been trading, making the recommendations for my clients, and that's the right thing I should tell you. Coffee. It's treated us pretty good. It doesn't always work that way, but it's been interesting. But I start my ideas with that cup of coffee, and for whatever reason, the chart setup on coffee has been phenomenal. Now, in the metals, no, I don't think the chart setups have been phenomenal. I think we have reasons to no longer be bearish, but I don't see the reasons yet to get bullish other than in that palladium contract. But I cover all the markets. I cover 40 charts in the morning with you. I record at 5:40 in the morning. The price of this service, about the cup of coffee, $7.95. If you haven't tried it for 30 days, you're not committed to anything. I think if you're a serious trader in these financials, the metal markets, the currencies that they're so tied to, these events that take place, I start your day off and I can tell you what Europe already thinks, Asia, what's going on in the U.S. and where we sit. How do you find out more for yourself? Go to our website, www.iraepstein.com. Go up to the word research. It's all right there. Give yourself a try with it. $7.95 for 30 days. Give it a try. I'm Ira. You have a great day. I'll see you tomorrow.